Hi, and welcome to the Stock Scores Market Minutes for April 16th, 2018. This week I want to talk about price volatility before we get into the market analysis and the trade of the week. Volatility can be the trader's best friend. It can also be a real enemy. It's important to understand when volatility is compressing or when it is expanding. To do so, we draw trend lines across the tops and bottoms of whatever chart you are analyzing. If the lines are converging, then volatility is compressing. If the lines are moving apart, if they are diverging, then volatility is expanding. Ideally, we want to trade breaks from converging volatility because converging volatility demonstrates that investors have some confidence that the price that they have given in the market is correct. And when we break from that, it's usually because there is some important new information that will drive a future trend. So let's look at the chart of the S&P 500 on the 60-minute, 30-day interval and just draw some lines on here. We can do something like this, and there we see lines diverging. We can go like this, and we've got an upward sloping channel. They're not really converging. Sorry, these lines are converging. So when the lines are coming together, that's convergence. And when you get the break from the tip of the triangle, you often get a trend, and that's exactly what happened. Now, more recently, over the last week or two, we've had another period when the lines are converging. We've got an ascending triangle pattern. There's more volatility over here than there is on the right side of the triangle. And because those lines are converging, we are near the breakout point. We can either break down out of the pattern to the downside or break up. And whatever direction we break will tell us what the likely future trend will be. Since the bottoms are rising in this pattern over time, that is an indication of lowering volatility and optimism. So we've got two important things working together. We have optimism because the bottoms are rising from left to right, and we have converging lines across the tops and bottoms, which means there is greater confidence here that the price is correct. So if we get an upside breakout, which I thought we were going to try to do on Friday, but it failed, well, if we get that, then the market will likely move back and retest those highs over there. Looking at the longer term chart, this is the weekly chart of the S&P 500, and here's that trend line that we've talked about many times in recent weeks. We held it a number of times. We've actually went through it intra-week, and this week again, we managed to move up through the week and end the week above the trend line. We do have converging volatility here because if I draw a line across those tops and a line across these bottoms, you can see that those lines are coming together, and that means that there is gaining some confidence. There's less uncertainty. Here we've got lots of uncertainty. Over in this pointy part of the triangle, there is less uncertainty, and that implies that we are nearing the point where we're going to break one way or the other. Because the trend is up into that converging volatility, it is more likely that we will break to the upside. Doesn't matter though, if we break to the downside, then we have to be pessimistic. So for now, we're testing that upward trend line, and that makes this a neutral chart. On to the Russell 2000, which is also in its upward trend, holding that upward trend line, a little bit of a converging volatility situation. It's still fairly volatile. You know, it's not as volatile as it was a month or two ago, but we are getting into this pointy part of the triangle, but we could easily go sideways for another couple of months, building a base before we make that next breakout. It's an optimistic chart long term, but short term, fairly neutral because we are trending sideways. On to the TSX 60. This is the 30-day, 60-minute chart, and there you can see converging volatility. The trend into that pattern is down. That makes this a pessimistic pattern. We expect we will get a breakdown out of it, but we could get a break up of it. It's a little different than the S&P chart because remember, the S&P chart has horizontal resistance and rising bottoms. Here we've got falling tops and rising bottoms, which makes this pattern neutral, but because the trend into the pattern is down, that makes this a somewhat negative pattern for the TSX. Now the longer term chart of the TSX demonstrates this long period of trading between support and resistance. We are starting to get some converging volatility, so less volatility. That means investors less uncertain. But until we break out of this pattern, there's really no sense of the direction that the market wants to go. It really just looks like the market wants to grind sideways here on the TSX. Moving along to the TSX Venture, we've had quite a bit of volatility lately. You can see a lot of volatility to the downside, and then this week we bounced back a little bit. We are still below the downward trend line, and until we can break the downward trend line, I would remain cautious on the TSX Venture stocks in general, although certain pockets can occur in this market where you get strength despite the downward trending market on the TSX Venture. Looking at treasuries, we've got that long-term pessimism building. That means long-term prices have been moving lower, which means interest rates have been moving up. Over the shorter term, the last 5 or 6 weeks, we've had a bit of a recovery, but we're going to get up to that downward trend line and get stuck. And so there's not considerable upside until we find resistance. There's also not considerable downside until we find support. The bias in the market is somewhat negative. So generally speaking, I think you have to be cautious on your interest rate outlook. It does look like it's more likely to go higher for interest rates than lower, which means this is going lower. But if we can break that downward trend line, then interest rates should fall. That's a big if. Doesn't look like it's ready to do that anytime soon. And the US dollar in the downward trend line still. We've talked about that many times. We ran away from it. We've come back to it. We've got low volatility there. The volatility is converging, and that means investors are fairly confident that the US dollar is priced correctly. Now, what direction is it going to break? Is it going to break in favor of the trend, which is the more likely outcome, meaning that the US dollar is going to go lower? Or are we going to finally break the downward trend line that the market has been in for over a year? And if that happens, we should get a fairly good rally for the US dollar. No good signal of where it's going to go yet. Watch for the break from the low volatility. And here's the gold chart, another demonstration of converging volatility. There's my line across the bottoms. There's my line across the tops. More volatility on the left than there is over here on the right. We've got relatively low volatility in gold on the right-hand side, but we can't break through this resistance. We keep trying, but until we can break out through that resistance, this is a neutral chart with a little bit of optimism building in the US dollar. Onto the oil market, benefits from weakness in the US dollar, but also from the political tensions that are happening in Syria, of course, with the US, UK, and whoever, France, doing some bombing in the Syria. There we've had that rally in oil. It's just gotten through resistance. I think good chance it pulls back before it goes higher, unless something really dramatic happens in Syria. But for now, it is still a market in an upward trend, and therefore you have to be bullish of oil and oil stocks. And finally, the chart of fear, the VXX, we're getting some converging volatility, but relatively still volatile compared to back here where we had very little volatility. Then we broke from low volatility, and look what happens. Now we're working on sort of trending sideways in this high volatility market, which means that the market is on edge. Investors are worried about the future direction of stocks, and they're buying insurance through the VXX and the futures market on the VXX, on the VIX. So my outlook then, neutral on US stocks in both time frames. US market does look better than the Canadian market, but both of them are seeing that condensing volatility that'll take some time to break out from. Gold, neutral on both time frames with a little bit of optimism, and oil, bullish on both time frames, although it's highly impacted by what goes on with Syria. US stocks are slowly building optimism, but they seem to be looking for a catalyst to motivate the buyers. We had good earnings from the banks on Friday. That wasn't enough of a catalyst because investors sold into that strength, probably because they didn't want to hold positions through the weekend, given the fact that the US and its allies may be doing a bombing run on Syria, and that's exactly what happened. Watch for a breakthrough short-term resistance as a cue that they are coming back, but until we get that breakout through resistance, expect we're going to be in a relatively low volatility whipsaw type market that is a little bit difficult to trade. Canadian stocks flat and stable. Watch for that break from low volatility on those. Gold still stalled, can't get through resistance. Oil is strengthening, but probably due for a little bit of a pullback near term. Fear is relatively high. Now this week I want to show you a losing trade. This is a trade I did on Friday using my worm strategy. The market tried to break out on Friday and a number of stocks broke to the upside on the open. It wasn't just UPS, it was FedEx, it was Amazon, it was some of the banks were breaking higher, but they quickly failed. The market sold into that strength. And so my buy signal, which was right here, well, that's when I bought UPS and it failed. And sometimes these things don't work, and that's why you have to take your losses to minimize the downside. So when stocks start to move through support and the idea, the expectations that you have are not working, it tells you that the read of the market was incorrect. The market's read of the situation that opened the market with strength on Friday was not the correct one. People quickly sold into that strength, and that's when you got to say, hey, my read was wrong, get out and start to look for better opportunities. Well, that has been the Stock Scores Market Minutes. Hit that like button, subscribe to the channel, put on the alarm so that you get the instant alerts when I upload a new video. But most importantly, have a great week in the market and trade well.